While the world watches China and India, Malaysia is quietly staging one of Asia's most impressive economic comebacks, the nation's prime location along crucial shipping lanes and its booming tech sector attracting substantial foreign investment, are positioning Malaysia as a formidable economic force in Southeast Asia, but the competition between the United States and China for regional supremacy is heating up. Can Malaysia win and protect its independence? Malaysia's location has positioned it as a linchpin in global trade, with its control over the Strait of Malacca being the cornerstone of its influence. This narrow waterway sees 80 vessels per year carrying approximately 25% of global trade. It's making it a vital artery to the world economy. From semiconductors to oil, the Strait sees all essential geopolitical goods pass through. Malaysia has actively leveraged its location. For economic and diplomatic advantage, it has developed two world-class ports, Port Klang and Tanjung Pelpas, making the country a major transshipment hub. These ports serve as crucial links in international logistics chains, making Malaysia an extremely attractive destination for foreign investment, particularly its tech sector. But to maintain its economic gains, Malaysia must maintain an equilibrium between the US-China rivalry, which has become increasingly difficult as the world polarizes. This approach is rooted in the country's historical commitment to non-alignment, allowing its sovereignty and economic interests. But China has been Malaysia's largest trading partner for 15 consecutive years, with bilateral trade reaching $212 billion in 2024 simultaneously. Malaysia's security ties with the United States remain robust, exemplified by the long-standing bilateral training and consultation group agreement established back in 1984. Prime Minister Anwar Ibrahim has emphasized the need for Malaysia to carefully navigate both relationships. But critics point to Malaysia's involvement in Chinese-funded Belt and Road infrastructure projects in pursuit of economic development. These raise concerns about growing Chinese influence and potential debt traps that have been issues sparking controversy in other BRI countries. Ibrahim and other leaders point to Malaysia's intentionally diversified military partnerships as a counter to that argument. Malaysia has enjoyed security cooperation with the United States since the 90s through numerous exchanges, joint training exercises, and visits, including cooperation in annual exercises. The Malaysian Armed Forces have welcomed visits from American naval vessels and aircraft carriers like the USS John Stennis and the USS Abraham Lincoln in the recent past. The country is also secured through the 5-power defense arrangements with Australia, New Zealand, Singapore, and the UK, creating a multi-layered security architecture. But simultaneously, Malaysia's cautiously expanded military ties with China. Military links began in 1995 and have grown steadily since Malaysian and Chinese defense officials pledged to advance military cooperation in 2011. And it looks like the U.S. may be falling behind China in regional diplomacy. Studies by the RAND Corporation revealed that China's influence in Malaysia exceed America's, placing Malaysia alongside Indonesia, Thailand, and Vietnam as countries where US influence lags. The reality comes into focus as Malaysia tries to navigate Chinese assertive actions in the South China Sea. For now, the Chinese economy is way larger, and Malaysia is going to have to get richer if they want to compete. This is a big deal. Malaysia's economic transformation since gaining independence in 1957 is one of the best stories in the Eastern Hemisphere. Initially dependent on rubber and tin exports for over 90% of the country's revenue, Malaysia has evolved into a hub for advanced industries like semiconductors and artificial intelligence. The manufacturing sector now contributes $280 billion to GDP, while the services sector accounts for nearly 55% of annual GDP growth. This diversification makes the country more resilient to economic shocks and less dependent on a single industry. Technology products, particularly in the semiconductor industry, have replaced rubber and tin as the country's primary exports, and among the forces powering this is talent from abroad. In 2023, Malaysia granted a record-breaking 154 expatriate passes, the highest number since 2018. Many of those workers have helped set up Malaysia's technology assembly facilities, which would be considered the lower end of value-add manufacturing, but the Malaysian government has signaled its intention to move up the value chain in semiconductor production, aiming to focus on the front end of manufacturing processes, including water fabrication and photolithography, to support this ambition. Malaysia established a national semiconductor strategic task force in 2024, highlighting the critical importance to the country's economic future, but their economic transformation extends to the critical minerals sector, an increasingly important part of global tech supply chains and an area of interest in the US-China rivalry as great power competition shifts from oil to the minerals that are essential for advanced technologies. Malaysia has positioned itself to benefit from friend-shoring initiatives developed economies are seeking. More secure supply chains for minerals like gallium and germanium, which are essential for high-performance chips used in defense and advanced computing applications. Malaysia has a growing role in processing these critical minerals, which creates economic opportunities and geopolitical leverage. Another growth opportunity is Islamic finance, a sector that's grown by over 500% in the last decade. Malaysia's positioned itself to be at the forefront of a trillion-dollar industry based on Sharia principles, which prohibit interest and speculative activities while focusing on risk-sharing and ethical investments. By 2023, Islamic banks in Malaysia reached $260 billion in total assets, accounting for over 30% of the country's banking assets. The Malaysian government's Islamic Financial Services Act of 2013 provides a robust regulatory framework and sets a global standard for Islamic finance governance. As a result, Malaysia has been setting new records for the issuance of bonds year after year that generate returns without violating Sharia principles. But outside of the success across the whole country, one island is particularly thriving. Penang is a small island occupying just 1.0 kilometers, but it now contributes nearly 8% of the country's economic output. The region's rise as an unlikely innovation center began in the 1970s when Malaysia sought to diversify its economy. Beyond commodities, Penang's leaders took a calculated risk by establishing semiconductor plants and actively pursuing foreign investment. This strategic move laid the groundwork for what would become one of Asia's most dynamic tech ecosystems. Initially, they faced significant hurdles, struggling to attract investment due to inadequate infrastructure and a limited skilled workforce. To overcome these challenges, Penang's government invested heavily in modern industrial parks and a robust highway network, while offering tax incentives and streamlined bureaucratic processes. Decades later, the state has become renowned for high-end processes like wafer fabrication and integrated circuit design, and the state now accounts for 5% of global semiconductor exports. By 2023, Penang attracted over $13 billion in foreign direct investment, partially powered by its cost-effectiveness. Compared to other tech hubs, their lower costs of labor and well-developed infrastructure have led American semiconductor companies to maintain and expand operations within Malaysia. Intel, whose first facility was established in Penang in 1972, announced in 2021 a $7 billion investment to build a chip packaging and testing factory. Similarly, Global Foundries opened a hub in Penang to support its global manufacturing operations, while German chipmaker Infineon announced plans for a third wafer fabrication module in Kim as part of a larger national strategy the Malaysian government is committed to building upon. Penang's achievements plans are underway to train an additional 60 high-skilled local semiconductor engineers to address labor shortages and support the growth of the tech industry nationwide. And get this, the country now produces more engineering graduates per capita than the United States and Germany. This pragmatic approach to economic development and superpower competition is allowing Malaysia to position itself as an alternative production hub for companies looking to diversify out of China. So what's stopping Malaysia from joining the ranks of Asia's other top economies? It's called the middle income trap, a phenomenon where rapidly growing economies stagnate at middle income levels, and it's been plaguing Malaysia for years. Only 9 out of 167 economies have ever successfully escaped this trap. In the past, for decades, Malaysia's total factor productivity growth has lagged behind regional competitors like South Korea and Taiwan, averaging just 8% compared to their 1.7% between 1970 and 2010. Corruption's impact compound these. Issues high-profile cases like the 1MDB scandal have tarnished Malaysia's reputation. In response, the government established the Malaysian Anti-Corruption Commission to investigate and combat graft, while poverty reduction efforts have achieved some success bridging the gap between wealthy and the middle class has proven. More challenging efforts to streamline bureaucracy, improve education, and foster a more competitive business environment are underway, but they will need to be well executed. For Malaysia to have a chance of becoming the 10th country to escape, middle income as American and Chinese companies pour billions into Malaysian operations, this nation of 33 million people is demonstrating how mid-sized countries can leverage geopolitical rivalry to their advantage rather than becoming casualties of it in tomorrow's Asia. The countries that prosper won't be those that choose sides in the U.S.-China rivalry, but those like Malaysia that make themselves indispensable too. Both